Hello, 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 hello. Mic test, mic test, mic test. All right, guys. Looks like things are in order here. So we'll just continue with the webinar. I'll just check the audio. Well, it's working at my end. Let me know, guys, in the live chat if you can hear and watch the feed going properly. There was a minor problem at the beginning. So I have redid everything and it looks like everything is working. So welcome to the 149th edition of our Trading Opportunities webinar series. I'll just get started with a very quick introduction. Well, I'll wait for confirmation from the audience. At least everything is working at my end, so I think it should be the same at your end. So anyways, as I was saying, we are in the 149th edition of the Trading Opportunity webinar series. For those of you new here, this is a weekly series. We conduct one webinar every Friday at 10 p.m. IST or 4:30 p.m. GMT. So whichever time zone you are in, just convert it accordingly and join us live in the upcoming webinars. The way we proceed with these webinars is we discuss Euro, crude oil, gold, S&P, and Nifty, and then BTC. We also take doubts in the live webinar. So if you are interested in discussing things which are related to the discussions we are doing here, basically Elliott Wave and price action analysis, then you are more than welcome to join in on our live chat and ask questions. As for the past webinars, in the last 147 webinars, we have in total covered total of 371 trades. All those trades were discussed live in front of you guys, live in our YouTube broadcast, which also goes live on our LinkedIn page. So both the audiences would have been watching us live. And other than that, there's a past track record of all the webinars which we have conducted since the beginning of this YouTube channel. Basically, you can check all of this, and we have had an exceptional track record here of 60% plus accuracy. You can check all this on the forecast accuracy page. Still need to update the weekly webinar account here to 371 trades discussed in the last 147 webinars. Anyways, that's about it for the webinar and the videos which have been uploaded in the past and the current series. Apart from that, if you're interested in learning more about my work, you can just check out my book, Think with the Markets, available on Amazon's electronic delivery platform called Kindle. And lastly, if you're interested in live updates, you can always send a request for our Slack private group, which obviously is private, and I cover everything in detail on a day-to-day basis with my trades and analysis. Right. That being said, let's start with our sequence and first discuss the chart of euro. As always, I'll just look at what was being discussed in our last webinar. So I'll just open up 150 webinar and head over to the timestamp for euro so that we can see what was being said on the chart of euro before heading over to that in our live discussion. So here's a discussion from our last webinar on euro, which was conducted on 10th of January. And by the way, I still haven't gotten any confirmation. I'm not sure about the audio, so I'll just check one more time at my end here. This looks to be working. Anyways, I see there are people live in the chat. I will appreciate a confirmation as well. After all, it's a live webinar. Yeah, so as I was saying, we were discussing euro last webinar, and the main theme was that 1 second here. Let's get the main theme here was that we were expecting an impulsive leg with the fourth wave complete and the fifth possibly in play, which could go down, and the long plays were only possible if we saw a move which took this market above the 2-4 trend line, or this trend line basically. That was the discussion from last webinar. I think that is what we discussed. That was the main theme. Let's check the price at the time of discussion. The price at the time of last webinar was 1.02355. Right. So with that being said, let's now head over to the live chart of euro. So 1.02355 on 10th of January 2025. Where is that? Somewhere here. Right. Since then, market has given a minor movement to the downside, nothing substantial, but the main theme or the main count which we had in mind is still holding up, is still how the market is progressing. So I'll squeeze the chart here and get started with our point of reference, or the starting point of this analysis, which is coming out at this point 1.1236. From here on, what we do have is a simple impulse in the downward direction, and we have already suggested the movement as an impulse complete, first leg here, second here, third here, fourth here, so on and so forth. Nothing new here. This is the same discussion which we did in our last webinar. One second, there's one thing I have to check here. Yep. So this is the same discussion we did on last webinar, and this is the same 2-4 line. As you can see, the market is still holding below it. So my assumption is that we cannot say with the complete certainty, although we can say that fifth is complete here. There is a possibility that this is just the first of the fifth and the second of the fifth. You know, the fractal nature of Elliott wave suggests that there are 5 waves inside of the waves 1, 3, and 5. So it could just be the wave 1 of the 5 instead of the whole correction complete here, which could lead to another leg down, and you get the point. Some more downside may be seen. And what's the alternate view? When can we say this structure is over? We want to see the market go higher and possibly take support over this trend line, and that could lead us into a strong long setup. So thank you, Dawood. Hello, how are you doing? Let me know how's the audio going here, and the video feed. Of course, we had a little problem in the beginning, and no confirmation yet. So anyways, what I have discussed so far is that we are expecting either the fifth is complete, or maybe it has 2 legs down remaining. The downside confirmation is very simple. If we see a move below 1.02026, then we can say that this market is still having some more what you call downside remaining. However, if we do not see a move below this level, instead if we see what you call leg higher, that is the market goes above this trend line, right, and then take support above it. Perhaps that's the best case scenario. It does not have to take support above it, it can just go above it. That's fine in itself, you know. Then we'll be more interested in taking longs, or only interested in taking longs if you ask me, right? At least short term longs. So long story short, downside, this is the level 1.02026, and we can have 2 legs down remaining if this count holds, if this count is correct, proper, whatever. And for the upside, we just want to wait and watch if the market holds above this trend line. Very simple, very straightforward. Keep it in your watch list. I am under the impression this will give us a good trade real soon. Thank you for the confirmation there, Dawood. And Himura, hello, doing fine here. And you guys. Okay, thank you for the confirmation, guys. And let's proceed with that out of the way. Let's proceed with our next chart of crude oil. Let me know if you guys have any doubts or questions while I load up the chart of crude oil and get with our discussions. First of all, as such, let's load up the last webinar's discussion here. And in the last webinar, we have discussed that this market is, let's see over here somewhere. Yes, this market is possibly heading upside. And the major idea was that the wave B correction is still continuing. The wave B, as we discussed in our so many past webinars, could go as high as wave A, maybe a little bit higher, because wave Bs can do that in their flat formation. Even in complex, they can do that sometimes. But long story short is all this range was free territory for this market to go up. And at the point of discussion, that price was around 76.23, right? So at that point, we were under the impression that this market will go a little bit higher. Let me see if there was something else discussed. Again, you can check the whole discussion and the whole details by going back into the webinar and checking this whole timestamp starts around 15 or whatever. So anyways, that was the whole discussion from our last webinar, and we would now like to check the live chart and see how things have progressed since our last discussion. So here's the live chart of crude oil on screen. So first of all, this is our point of reference around the price level of 95.53, and as I just mentioned, this whole thing could be a playing territory for this market, and it has so far gone not exactly at the high but very near to it, and my play or updated count has been like this. We are assuming a triangle here, but then again, it's not really required to be a triangle. It could be one of many different possibilities. Namaste, R. Singli. It could be many different possibilities, but my main theme or main play here is that if even if it's not a triangle, we should assume it as a sort of complex structure, and in a complex structure, a corrective continuation with the ABCs are quite common. So with that in mind, what I have is that we should consider this as our new point of reference. And from this point of reference, we should just count the three legs up, ABC up. Now again, keep in mind, we can count it as a triangle, and then in the triangle, we can see this as a part of the wave C, I believe. Yes, it is the wave C circle degree. And even if we don't do that, I am of the view that it is better to count this whole structure as a corrective ABC or WXY up, right? We don't have to get too much into the technicalities. It could be counted either way. It still will have three legs. Only the internal structures will change, and the internal structures are not that important at this point in time because of the simple fact that we want to see something like this. So we wanted to see this leg taken out, this leg taken out, this level. Now, as such, the minimum requirement is that this leg has been taken out. So now we are left with two possibilities. Either this market will continue this sideways movement going down, going up, or the simpler possibility that this market will form a standard kind of a structure, standard expectation based on multiple hypotheses I have is that this market will test out this high. I think we also have another price action level coming here somewhere near at 83.61. Let's call it 83.68. So my bias is that this is playing out kind of like a flat. Maybe it's a WXY, but long story short is what we expect is 83.68 is perhaps going to get tested. Now, my main hypothesis is if that level is going to get tested, there are two ways. Either the market can just straight off go there and then go back into the price territory and continue sideways movement from there on. Whatever. I'm just drawing a rough outlook. Second hypothesis is that this market can go there, correct, and then even take out this target. So the main theme is that this level might be tested based on multiple different views that I have, but it is unclear which way it will take. So the secondary hypothesis is the one we can look out for, because in the secondary hypothesis, we have the liberty to wait for a pullback and then trade this leg up. What I'm really saying is that if this level of 83.68 is tested, let's see where it exactly is falling. So we also have a resistance zone here. So anyways, if this level, roughly if the market reaches near this level, then we have a chance that this market will also give a pullback and then test that level again. So long story short, there's a chance that this level may give us some place to the upside, specifically after the pullback. And as for the current count, I think I don't have a very strict count. There are 2-3 ways I can take this progression from here. We can call it, let's say, a W here, and then this will become a X here with a triangle in it. And then this becomes a 1, 2, 3, 4, 5. So that's the A of the W. Let's just finish it. B of the W and then C of the W. So that's just one way of looking at it. Of course, we don't have to count it the X as a triangle. We can also take the X complete over here. That will give us another picture that will suggest another complex outlook, and so on and so forth to get the gist of it. If I go with these analysis, it will take way too much time. I'm not interested in discussing in too much detail on WTI crude oil. As such, I haven't even traded in this week. Our major plays were on gold, followed by S&P, and there were some plays on BTC, but I did not take any of them. I was mostly involved in crude oil and what did I say? S&P and gold, right? So that's the general idea on WTI crude oil. Keep in mind, as I just discussed, there are 2-3 different outcomes based on where you take the X completion, how you take the X completion, and so you can check that in your own time. I'll probably have something more clear on crude oil in the next webinar. Nothing much to discuss here, and I'll probably avoid some questions on this as well. Hi, Manuel Costa. Regular viewers, one of our regular viewers. All right, so with that being said, let's now head over to our next chart of gold, where we have a lot to discuss. A lot has happened. Let's see, where is gold? So here we are with the discussion from our last webinar to check out what was being said in this 10th January 2025 webinar. I think I've discussed some live trades there as well. But more importantly, we were interested in what you call a long trading opportunity on gold, right? That was the main discussion or the main theme of the last discussion, right? We were expecting possible impulsive structure .1, .2, .3, .4, .5. So basically, we were suggesting two possible up legs in play on gold, and I did take the upward plays, although it was not as simple as it looks from our last webinar. Again, these things keep changing. So what can one say or do? That's just the way of the markets. Although we were able to capture all of this in our live trades or live Slack posts, we'll go over that in a little bit more detail now. Actually, I have to say this is a +1 on gold because it played out as per our last idea. And let's now head over to our actual chart of gold and see things in more detail. So here's the chart of gold. I'll just remove all the drawings. Let's just point out to the price level from our last webinar first. So in our last webinar, the market was 10th January, somewhere here. Somewhere here the market was, I believe. We could have checked the exact price level, but anyways, we don't really need to. We just wanted a rough idea. Market was probably somewhere here on 10th January, around 2686 or whatever. Right, since then, a few things have changed or evolved, whatever you would like to call it. And I'll just like to have a quick look. All right, that's it. Yes. So this is our point of reference for this count, price level 2581, and we are looking at an impulsive structure in the upward direction. That is the main count. We are following circle 1, circle 2, and then what do you call dot 1, dot 2, and then another series of 1s and 2s. I'll discuss it in more detail. Let me just check one more thing here. Yes, it is still holding. So we'll discuss it as our second hypothesis. So let's call this hypothesis as hypothesis 1. Probably should call it 2, but anyways, you get the point. We will discuss two different scenarios here. So this is the first scenario we are going to discuss here. In this scenario, what we have is a series of 1s and 2s heading in the upward direction. And in this particular sequence, I'll just check. Hey, good evening, Raghu. So in this particular sequence, what we do have here is, first of all, we are seeing a 1 here, circle 1, circle 2 here. What I'll do is probably mark it, and then we can remove everything and have much more clarity, actually. And then we are heading up for the dot 3. That should be enough. So in this hypothesis 1, we have a wave 1, circle degree here, and then circle degree 2 here, which is already complete. Then another 1, another 2 for a flat structure, regular flat, and then another 1 here, 2 here. And then we are heading in a series of nested impulses. So another 1 and 2, another 1 and 2, another 1 and 2, another 1. So you get the point. It is looking like a super bullish structure because we have multiple nested 1s and 2s in here. What I'm talking about 1 and 2, 1 and 2, basically I'm talking about the impulsive structure, and within an impulsive structure, we have 5 waves inside of it. So we can call this as circle 1, circle 2, and circle 3, and circle 4, so on and so forth. We have up till 5. And once the fifth is complete, we get a correction. However, in this case, we haven't reached that far, at least in hypothesis 1. Watch out, this is going to be a little bit complex discussion, and then we have an alternate view, so you have to watch both of them to get a proper understanding of this market, right? So in this hypothesis 1, we have the circle 3 in play, that is this leg is currently in play, and within the circle 3, the whole impulse will have 5 waves inside of it. That's what we call the fractal nature of Elliott wave, and within these 5 waves, we have labeled them as dot 1 and dot 2, and we are assuming that the dot 3 is still in play. There are probably one or two more ways of counting it. I'm not going to go into too much detail. The gist of it all is that we have at least wave 3 is at least having what you call 2 legs or more remaining, and then there's the fifth leg. So we have probably got 3 or more legs remaining. That's the whole conclusion that I have of this market right now. So in hypothesis 1, you can do the count at your own end, check the details, check the count, alternates, etc. But the gist is that we have 3 or perhaps maybe more legs remaining, and this view is kind of holding strong because as you guys recall, our last discussion pointed out that we want to see a move which should at least take out 2726 or this peak. As such, the market has taken resistance at 2724, which is as you can say almost there, but I personally would like to see this peak taken out. If it is not taken out, then that can lead to some very bearish conclusions. So long story short, our bullish hypothesis or H1 holds, and we are going to see at least 1 if not 3. Again, keep in mind I'm talking in regards to what do you call bare minimum. If we are assuming that 3 legs are remaining, then the bare minimum, even if this count is wrong, we can say that at least 1 is remaining, right? Because 1 is less than 3, of course. Basic reasoning. Now I would like to switch to hypothesis 2, and this is suggesting possible diagonal formation. And within this diagonal formation, we have the 1 and 2 and 3 and 4 and 5 already complete. Again, this 5 can be a little bit here, which I think is the case here. It will probably give us a minor leg up before taking any movement to the downside. And what is this diagonal structure I'm talking about? Basically a 5-wave structure, but the only difference being that the waves 1 and 4 overlap. As you can see over here, this fourth is overlapping with the price action of 1 over here, right? So the characteristic trait of these setups, or this setup particularly, is that we can have a clear trade once we see a move below this white trend line, or basically sustenance below this white trend line can give us a shorting opportunity. Not always, but generally it holds true. So that will be our setup in this particular case, or in this case, this count holds. So to be more specific, we can draw the arrows somewhat like this. That's the expected progression as per our hypothesis number 2. Let's call it the yellow hypothesis 2, which is suggesting minor upside movement can be seen before the market gives a possibly deeper correction or a correction after the diagonal, right? So that's the gist of it. We have two hypotheses. Hypothesis 1, as I just concluded, can have up to 3 legs up or maybe more legs up remaining, so minimum 1 leg up. Hypothesis on screen now is suggesting that the bare minimum 1 leg can be seen. Secondary idea within this hypothesis 2 is that this 5 can be marked as complete over here, in which case this market can just fall from here. But that's it for gold. I think I've discussed it in quite detail, although I am sure this was not the simplest discussions. If you have any doubts, I'll wait a few moments before heading over to our next chart. If not, do type in clear, understood, or something in the comment section so I can get the proper understanding if you are going with the flow or getting more doubts or what's the case. Right. I'll take a few moments here before we proceed with the next chart of S&P. By the way, I forgot to mention that we had a series of trades on gold. We can have a very quick look at gold here on our Slack group. Multiple scalps we had taken here within this week. Is it January 10th, right? So we want to check after January 10th. added minor longs, and then there was a big pullback, I remember. So these longs were closed in loss because of the big pullback. After that, we again added minor longs, stop loss 2660. Scalp longs were added, booked profits on all scalp longs, and then stop loss moved. So this is me trying to convert some position into a swing play, because I was of the assumption, if you guys recall, that gold has what you call a big up move remaining. Now what happened within this week was interesting. We tried many times to capture big up moves, never happened. All we were able to capture were mostly scalp plays. I think one big move we were able to capture, but other than that other than that, most of it was scalp plays. And scalp plays, this theme happened over and over again. We entered minor longs, and again, this would have been closed in profits, but not very huge, I think. See, we are trying to move the stop loss above entry. This is something we do when we want to ride the wave and we are expecting a strong up move. Longs were auto closed because our trailing stop loss or trailing level was hit, so minor profits only. This happened multiple times, giving me the idea that perhaps we need to wait for a bigger pullback or just a wait and watch scenario on gold. Anyways, that was the case with our gold trades from this week. Very active on gold here. Thank you for the confirmation, Joe. And in that case, hey, Raghu. Yeah, gold analysis perfect. So Raghu is a member of our private Slack group, so perhaps he was able to capture some moves with us. All right. Thank you for letting our subscribers know. With that being said, I think we should now move over and spend more time on S&P instead of looking at past glories. And here is the chart of S&P's 500. Let's see what was being discussed in our last webinar on this particular counter before heading to our current discussion. 1 second here. So let me see if there is something else. Yes, we discussed a bearish scenario, and that was, I think, one of the main discussions from our last webinar. And we projected levels of 57, 46 to 56, 58. 57, 46, 56, 58. Let me see if there was anything else discussed here. And yes, there was the main idea which was asked by Jeffrey, one of our Slack group members as well, that what would be the case of bullishness when to take bullish trades. And we discussed the trend line. Once it's taken, we can then look for long plays. I think that was the main theme. The price at that point was 5809. The bias was super bearish. From a scalp or short-term perspective, we were definitely looking for downside. I'll just note the levels so that when we head over to the actual chart, we can just check what played out, what didn't, and there is no room for confusion or doubts. So with that being said, let's remove this last webinar discussion, or not remove, head over to our current discussion and see how things played out. So 10th January, right? So let me just squeeze everything. So we were somewhere over here on 10th January. The market did go lower as we were expecting, and it did not go to precisely what we were thinking as the downside levels. Not even the first level, 5746, would have been the minimum level. It stood above it to, where is it? 5771. So this was overall a kind of a bullish market, not kind of, it's quite bullish in that sense. And that brings out the questions: what is happening here? What's the new count? What's the updated view? And what can we make of this market holding even above the minimum level of our expectation? Right, so let's answer all those questions one by one. Let me go to 1 hour, and 1 hour is enough here. Right. So here we are assuming that this market is giving us a correction from this point of reference. What is this? Price level 6035. So from 6035, we are assuming that this market has been in a kind of a flat correction. Specifically, this is the A leg of the flat. This is the B leg can be actually assumed in two ways. I am assuming currently it as being continuing inside this count. So let's call this H2. In H2, we are assuming that B is continuing, and then it can have another leg lower wherever B completes, right? It can have one more leg down remaining. This is kind of a little bit bearish outlook. There's a secondary outlook. Let's just call it H3, H1, whatever you would call. I'm just discussing different ways or scenarios. In this outlook, we can say that B is already complete here, right? Quite clear. I don't want to get into too much details. I've already checked these things many times. Just giving you a rough outlook, and the C is here, and this just points up. Let's just call this H1 because it's a bullish count. So H2 is suggesting minor upward movement, which can then follow a downside move. However, H1 is suggesting bullish play, right? Right. If H1 is suggesting bullish play, and if it is playing out, then we really want to see the market sustain above this trend line. It is already above this trend line. That was the main goal of this count. I have updated it multiple times in our Slack group that we want to see sustenance above the trend line. But in a more classical sense, what we would like to see is possibly some pullback onto the trend line. And once we see this trend line getting tested over here or anywhere for that matter, and then that level takes the market higher, then we can look for a very clean breakout trade, a classical price action setup to take this market higher. So long story short, what I'm saying here is that we have two scenarios here. And good morning to you, Luis, one of our regular viewers. So what I'm saying here is that we have two scenarios here. One is suggesting that minor downside can be seen. Second is suggesting that we have a strong upside remaining. Now, good thing is that for H1, which is suggesting strong upside in play, we don't have to do much. We have to wait either for a classical pullback, trusting this trend line, right? Or a secondary case, there is no pullback and the market just goes up. So H1 will be simple to play if there's a pullback. Perhaps we can catch some stock specific, not perhaps, we can catch some stock specific plays, because generally if the index is bullish, stocks are ultra bullish. So we just gotta find them, the ultra bullish pair of stocks, sector, whatever, right? And then make our plays accordingly. So that's it for S&P. It's just wait for what you call pullback, and then the classical setup. If not, then look for stock specific, sector specific plays. Overall, H1 looks very strong. That's why I'm calling it as H1. We don't have the confirmation for it yet, but you get the picture. I've discussed both the views, and I think that's about it for S&P. I don't have anything much to discuss on S&P here. If you guys have any doubts or questions, you can just type them in the live chat before we head over to the next chart of Nifty, which will be followed by BTC. Praveen, BTC view, sir, please. So yes, of course, we'll discuss BTC. Praveen, just wait for a few moments here. First, we'll discuss Nifty. Right, so that's it. Let's now head over and check the chart of Nifty, basically our last discussion, and after that, we will discuss the live chart. Looks like a lengthy discussion on Nifty from our last webinar. So let's see what was being said on this chart in our last webinar. First of all, we were looking for a C leg lower. Yeah, here's the thing. We discussed a very short-term setup, and the view was that this market will open gap down was a strong view I had. Actually, I was quite certain of it, but there is only a degree of certainty that I can show publicly. The rest of it remains to be shown in the actual trades, right? So anyways, you should check this whole discussion even if you don't trade this instrument. We had some very clear points made here which will add up to your knowledge later on, kind of the things which I generally don't discuss in public. Anyways, point was it will open gap down and go lower, or just go lower. Those were the two cases. Let me see if there is something else which was discussed. More or less, we had discussed downside targets 22,980, 22,888. So we'll just call it 22,980. So overall, we were looking for more bearishness to follow on this counter. and gap down theory, etc., also played out. So overall, this was a +1, and also we would like to now see what happened with our counts or count-wise sequence. What's new? So let's load up the chart of Nifty here on screen now. The low currently we have is almost 23056. It hasn't really touched our expected target for the downside. It doesn't always have to, but in this particular case, I am quite hopeful that it will, or there's a high chance of it doing that. Now, keeping the targets aside, we are even more interested in what's the play at hand from a counts perspective. So let's have a look at the Elliott Wave count. We have discussed this particular part, I believe, many times before. So from this point on, we have a WXYZ correction. So I'm not taking this as the point of reference. Let's take this as the point of reference and focus our energy on the last leg, which is actually more important and more substantial to this discussion. Again, guys, I have discussed this count in quite a bit of detail. If you want the whole picture, whole stuff, just go to the last 2 webinars, 3 webinars, perhaps check the Nifty analysis. You get the higher time frame analysis there. Right. So without wasting any further time, we have this point of reference, price level 24222. Right. 1, 2, 3, 4, 5. So I'll just tell you what I'm assuming here. I'm assuming that this market is heading lower as a possible zigzag. And that's one way of looking at this market if we want to see a strong downward movement. Market can go down in multiple ways. In this case, because we are assuming a WXY triple zigzag correction, and we are in the wave Z. Wave Z will have a zigzag in it, and in a zigzag we have 3 legs. We call the first one the A, the B, and the C. As you can see, we have marked the A complete here, and possibly B is complete here. Who knows? This whole price range is now B territory, so any movement within it would still mean that the wave B may still be in play. So we are not very sure, and we don't really care much about the B. The play is very simple. We are looking for C as per our rough outlook on the right hand side. And the play is even simpler because we are looking for a break below 23077. At least I particularly will look for some shorting opportunities below 23077. I mean, and that's about the extent of public information I can discard over here without making things too complex for our general audience. Right. Second thing you need to watch out for is if this market shows some strength, or what you call goes higher, if the C does not go to our intended targets of whatever was discussed in our last webinar. Some of them are here. What is this? 22888 and 22914. Let's just call it 22,915, right? So if the market doesn't really go to all these levels, all these different levels, and tries to show some strength, then even so, I'm expecting the market to take out at least this last low. So long story short, I am assuming that this level will at least be taken out once. So that brings us to the idea that there will be multiple stocks which are having short setups, and they are indeed stocks which are having short setups. We were able to catch the shortfall on SDFC Bank, ICICI Bank, and Axis. I'm not sure if I shared, but I personally was uh, holding a short or bearish view on multiple counters. Anyways, not getting into too much detail because that's not really something we discuss in public stocks and specific things regarding the internal components of Nifty 50. But long story short is we are looking for a short-term down move, which should at least take this market lower than the wave A low. And if things continue 23915 and perhaps even lower levels, we don't have to discuss every time. We discuss them in the last webinar for the sake of your convenience. Further lower level is 22565 and maybe even 656. I mean, and maybe even lower to follow. And that's about it for our take on Nifty. And keep in mind, guys, the probability of this market just taking the A low and then reversing, that is doing something like this, is not unreal. It can and does happen a lot of times, specifically Nifty and its stocks, obviously. So do not hold short positions without strict stop losses, because we are trading the end of a higher time frame move. So wave Z is the end of a triple zigzag, and wave C is the end of the zigzag within the triple zigzag, or the last zigzag within the triple zigzag. So again, not trying to make things too complex. If you know what I said, you know what I said. If you don't know, don't care. Just keep in mind this is a place where you need to be really, really cautious. Right? If you guys ask in the comment section, I will even clarify my last statements. What do I mean by last zigzag of triple zigzag, etc., etc. If nobody asks, I'll just move on to the next or last chart of BTC, where things have indeed played out picture perfect, right? So let's have a look at that. So here's the discussion from our last webinar. We were having the price around 94210 when this last webinar was conducted on 10th of January 2025. The main view was that this market may have some more downside remaining, which can take it a little bit lower than whatever this low is, right? And let's go further, and then we can see upward movement, which can take this market 10,102,500 or higher. I mean, probably there is some other discussion here. I don't exactly know what I'm saying at this point. You can just check it for yourselves. The idea of showing this last discussion was just to establish a basis of what we were saying last time. Nothing more than that. And here you have the live chart on screen now. Everything has came into play pretty much as expected. This was the 10th January time when we were discussing the market somewhere, perhaps here. Somewhere here, actually. As you guys remember, we had some trend lines drawn here. And I was suggesting some more downside, at least one leg down was remaining. It did happen that way. And then the play was that if the market takes this level out, we can have more long plays to the upside, etc., etc. We captured all of that in our live Slack post. There were multiple posts on BTC, as a matter of fact, covering every single move in detail. So this is again a plus one kind of market. Whatever we discussed in our last public webinar has played out to fruition. And if you witnessed it, you know it. If you did not check it out in the last webinar, here is the detailed play which we covered in our Slack group. We were suggesting downward movement and then up, or that was the expectation. And here is the upward movement. So we were able to capture the minutia of details. 96,000 plus levels. Market will go and then take out this CN channel, this bluish trend line. It eventually did take out this trend line. Here it is testing the high. Remember, we caught this setup here after the break of this channel, yellow channel. So this was all detailed setup posted in Slack. If you are there, you already know it, you already saw it. And here's the last part, that this market is still heading higher and all the counts and everything, which we'll discuss now. So moving on to our current discussion and discussing how things are, we are within the wave 3 double bracket of circle theory of possibly 1 or a. Now that basically means we have at least 2 legs remaining in the other direction. One will be for the completion of circle 3, another will be for the completion of circle 5. 2 legs remaining in the upper direction means if we are wrong, even then we expect at least 1 leg in the upper direction, right? As for the targets, I haven't mentioned any, but it is going to test lifetime highs. I think it is lifetime highs, right? No harm checking it again. Yes, it is lifetime highs. It will be testing it. What is this? 108223 something something. Let's go back to a lower time frame. So once these 2 legs are complete, one here and then another here, we may see a pullback here, which will then again lead to another leg up. So if this whole thing plays out, we have minimum 3 legs up remaining. And as a matter of fact, I don't think even that's going to happen. I think this conservative corrective setup, which I have ABC, is not going to take place. And instead, this market has finished its correction here. Again, we don't have confirmation, so we can just call this as a hypothesis. Let's call it hypothesis 2, and we can then say that the wave 3 is here. 4 is complete here. And hence there is no sideways continuation that is going to take place. It will just head over to the upside, straight up from here, right? And that would mean this is our circle 1, this is our circle 2, which is then being followed by another double bracket 1, double bracket 2. So you're getting the point, right? We have a series of nested impulses forming. There will be some 3 over here, 4, 5. That will just complete the circle 3, and then the circle 4 will come into play, and then the circle 5. So I just wanted to give you a rough idea here, and it's quite clear that the bullish count cannot be ignored at this point. It is actually looking more in force, and it is still suggesting minimum 3 legs in the upper direction. So we can get a lot of clear plays on this counter. Keep it in your watch list. It is going to give some very clear plays here. And of course, breakout plays generally are clear. We have discussed now the more bullish view as over H1, and there was a less bullish view which we have discussed as over H2 earlier in the Bitcoin chart. Again, if you have any doubts or questions, I'll wait a few moments. And of course, this is also our last chart discussion which we do in these public webinars. So let me know if there was any doubt on any charts we discussed earlier. Forgot to ask you guys to continue giving your support by sharing the content and liking these webinars. Keep in mind, guys, we in this 2025 year would like to see at least 1,000+ views. I've been saying it for a long time, but keep that as kind of a target here. If I don't see enough participation, then I'm considering downsizing the webinars. And if you like the content, of course, you wouldn't want that. So kindly share it with at least 5 of your contacts, your friends, your colleagues, or WhatsApp groups, Discord groups, or whatever you guys use to connect with your trading audience. Right. And with that being said, I think we are done with these discussions. Lastly, of course, if you are interested in the services of or what do you call up-to-date analysis and all that, you know where to send the request for Slack private group. The link is scrolling at the bottom of the screen right now. It is also in the description if you are watching it on YouTube. And I think that will be it from my end. I don't see any doubts or questions. Right. So with that being said, take care, guys. And thank you to those who stayed till the end. And of course, those who are sharing the content and helping us reach more people. I'll see you guys in the next one. You're welcome, Joe. Take care, guys.